Let's kickstart the show now with some macro numbers that we're tracking today. This is an important Q for India. The second quarter, or the July to September GDP, will be announced today at 5:30 p.m. And a CNBC-TV18 poll sees this coming at 6.4%. So this will be down from 13.5 that we saw in Q1. Lata is here with more details. Lata?
Yes, 6.4 is our poll, and that 13.5 was an understated number. Last quarter, actually, people were expecting 16 and 17%. Even RBI was expecting 16%. So because of that lower number, a little bit of overflow is expected in the second quarter. 6.4 would be a very good number compared to 8.4 a year ago. You shouldn't take it as a lower number because all these are coming off of weak basis for the past 2 years. Let me just give you the amount. The amount of GDP that people are looking out for is 38.05 trillion. And if we do hit that number, we would be 3.2% above the size of the economy in the first quarter, which will be very good. You know, second quarter is a monsoon-drenched quarter. And if you're able to grow 3.2%, that will be very good. Within that, agriculture. Agriculture is expected to grow reasonably well, a good contributor, 3.2%, steady as she goes, like last year and the year before. Manufacturing will be the letdown. Our poll gave a 0.7%. Several people have come with negative. You know, the range has many minuses and a plus 2% or thereabouts. So it's going to be a tragic performance from manufacturing. And one can understand there were a lot of, coal shortages, fuel shortages, chip shortages, all kinds of things that impacted manufacturing. Services will be the super performer. The big items, trade, hotels, transport, broadcasting, financial services, real estate, all these are big ones. All of them expected to do 8.5 to 8.6% over last year's already decent performance, and public administration. You must remember that these did extremely badly 2 years ago. So even last year was only a minor improvement over, pre-COVID levels. With all this 8%, we will just about come to pre-COVID levels. Private consumption is the one people will watch out for. If it clicks 12%, it's very good. It's expected to. After all, we saw very good auto sales. The government consumption also expected to be decent, 9.5%. And gross fixed capital formation, 20%. Don't let it take your breath away. All these are coming off very, very low basis in the 2020 period. Not much of it was made up last year. So we'll have to wait and see. If we do clock 38.05 trillion, we are in a good spot.
All right, Lata, thanks so much for putting all that perspective. In the most watched out numbers, the Q2 GDP numbers that are going to be announced today. And also later today, remember that Fed chairman is going to make a speech. So those two are important aspects which will define the market movement going forward as well. But let's take it to another big story of the day. And we just heard our colleague